All right, traders, let's get to today's recap. This is Christian from Hertz Tribeca Trade Group, and good afternoon. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. And today is Monday, March 13th. So obviously some big themes present. I will go through those. I will give you my opinion on some of the things that we're seeing right now in this in the marketplace, and yeah, we'll talk about where this could possibly lead us, and some just overall thoughts on the market. And I just did want to update my spreadsheet over here. You could see a couple things year to date. You can see the SPY is just barely up now for the year, up 0.8%. Qs are still up 9.2%, and both the mid caps and the small caps are now down for the year. Pretty amazing how quickly that transpired. And ARK is still up 18%. Not a lot of banking exposure there. And value versus growth, amazing, considering that beginning of year, probably a lot of people thought value was going to continue to outperform. Not the case, down almost 5% at this point. That's the value ETF VTV. So let's get to some of the events that happened, and there's a lot. There's a lot of moving parts. So one of the things that I usually say on Twitter as well as in my trading room is when the market's moving this fast and the VIX is 26, we could start with the VIX, even though I don't really like to chart the VIX. I just kind of like to look to see relative to other types of volatility that we've seen, how they compare, and what they're kind of telling us. But when the VIX, when we're again, then when you look at the VIX, it's obviously it's the volatility of the 30-day SPX options, but it gives you a sense of as well as how fast the market is moving. So when the market is moving this fast, I tend to slow down a little bit. I tend to slow down my trading. I try to really kind of put together some sort of a checklist, which usually has a few of the same points, and then a couple different points depending on whatever is causing the volatility. And then, once I have that checklist in place, or factors or things that I'm watching, it helps me take some of the emotion out of the equation. So I'm not making decisions as this market is moving really fast. I can kind of, have that pre-plan, to say, okay, is this an area where I want to be buying the dip? Is this an area where I want to be adding risk? Or is this an area that I want to be more, sitting on my hands? And I think today, in conclusion, and I'll go through with you, is doing more sitting on my hands and kind of just, I did participate in the market today, but I didn't really add too much risk. So I'll go through and we'll talk about a couple things, and we'll kind of talk about the good and the bad, because obviously there's a lot of bad on the tape, but there's also some things that could be good. It just may not just be for today or tomorrow. So let's talk a little bit about that. So number one, right, when you look at the performance for the day, right, the SPY finished just barely in the red, the Qs outperformed, and then IWM and IWC microcaps are down a lot, and that, the small caps do have the largest weight, and the small caps are the banks, so that is causing some of the problems. So let's talk about the banks first, and what I'm going to bring up here is just the day's movers. And we could also look at as well the overall carry, which was down just too much today, right? Finished down over 12% for the day. So what is concerning to me, and if you watch Friday's video, one of the things on the list on Friday's video was, hey, we need to see the banks not be down this much. And what's concerning is just how many names that were down over 10% in the regional banking ETF. And if you look, I have to scroll. There's 41 names. 41 names were down more than 10%. So to me, this is too much volatility in this area. And this needs to be, this needs to settle in a little bit. I don't like to see things like this. And while there's 41 names that were down over 10%, there's still 11 names that were down over 20%. That's too much. So I know that Silicon Bank, this is getting all the attention, but there's too many things like a CMA down 27%, a key bank down 27%. Forget even the First Republic, which was down 61%, right? And the Western Alliance, which was down 47%, right? So that's really where there's some pain in the market, but it's pretty widespread there in the regional banks. So that's number one. Like this has to kind of come under control. And whether that's some announcement between what the FDIC is doing, what the Fed is doing, I don't know if that clears this up better, or if it's somebody like JP Morgan buying taking a stake in one of these banks or something. But sometimes it just takes time. And I just don't think that we're there yet when you see this many names, right? So that's the conclusion, is that, we need more time for things to settle in. If you're a regular viewer of my video, I'm not like I don't like to, other than for like a day trade or something like that. I don't look to kind of, catch a falling knife. I'd rather let these things settle in. And I'm just not interested in buying the dip in any of these things, because I just think it's too much risk. I think if you're looking at something that goes down in the single digits and you go ahead and buy it, what happens if they halt it and now you've got nothing, and it's halted and the company's going under? Because what we've seen so far with a couple of the banks that where they're protecting the depositors, that's a completely different story in terms of they're not protecting the equity investors, right? The equity in some of these, not in some of these names yet, we don't know that. But the SIVB and the Signature Bank, the equity goes to zero, right? So if you're an equity investor, you don't get anything, right? And that's the danger of buying some of these. And again, while I don't think that's going to happen, I didn't think those two banks were going to go under either. So so unless you're like you're really like knee deep in terms of looking at a company's assets and liabilities and really analyzing that, and maybe you've had a conversation with the bank CEO or the CFO. Other than that, if you're not that familiar with some of these things that are falling this fast, I'm not really looking to do much in this space. Another way to kind of look at it too is if there's a name that you're really familiar with, right? Like a key bank. Well, I guess the most that you could lose is $11, right? So you can kind of structure your investment based on that, almost like an option, right? Like a call option, and the most that you could lose is the premium. So that's another way to think about it. So I'm going to move on from that, but I wanted to see, ultimately my thought was these things have to have like a strong close, and they didn't have that today. Again, tomorrow's another day, and something could change. Something could happen in the overnight market. Something could happen in the morning that could change this. But I don't like to see a close where this is down. I was thinking like, hey, if this has a hammer bar for the day, something that I tweeted out earlier, then hey, that's some progress. Buyers are stepping in. To me, this didn't look like any institutional buyers were stepping in yet, right? And those are the ones who are really going to move this market. Now, that's just one area of the market. Well, what about some of the other things too? Well, if you look on the left of your screen, that's market breadth. Right? You know that the market breadth has been horrible, for the market over the last month now. And that's not improving either. The Dow had 16 decliners, 14 advancers. The S&P had 292 decliners and 210 advancers, and the NASDAQ had 1,753 decliners versus 1,000 advancers. To me, that is not institutions are not buying the dip. Okay, and look at the 4-week new highs versus new lows. So for me, I'm just letting this play out. When you see something like this. And I mentioned the VIX too already, which is not coming off the highs. Now it's not, it was up 6%, so we're up 26. We are getting these wicks in these candles that are much higher. So to me, that's a small good sign, right? Like a small good sign. Also the VVIX, the volatility of the VIX itself, you can see you have a red candle there too. So that's a little bit of that's a very, very small positive. And then if we then of course, looking at the price action, right? We're still way below all these, we're now below all the moving averages. So that is to me, by definition, a position of weakness, right? And again, I'm not trying to catch the absolute bottom, right? I'm looking for setups to materialize. And that does get better, obviously, once the equities are on a footing. So we remain below the 200-day moving average, below the 50-day moving average, below the 20-day moving average, and below the 5-day moving average. At least getting back above that 5-day moving average will give me some type of some type of understanding that buyers are pushing us back above the short-term moving average, and we don't have that yet. We are still sitting at this VPOC, but we're also very close to this one down here at 37.95, which could be a place that we get down to. We don't know yet. It's too early. Qs, slightly more. Qs had an update today, up 0.75%. However, they finished nowhere near the highs of the day. So they did close above. So this is a very small positive here, is that we did close above the 50-day moving average and the 200-day moving average, but we're also below the 20 and the 5. So again, this is not really a position of strength either. We're also below the value area for the month, right? And here's how we look with the VPOC down here. For the Qs, we're kind of caught in no man's land right now. What about IWM, which has been getting the brunt of the volatility? That did take out this VPOC today, right? It did not take it out. I don't think it took it out on we were looking at this in the weekend video, but it did not get taken out on Friday. It got taken out today. So we do have some support in here. Looking at where we are on the weekly chart too, support won't come really into play until 165 here. So we got rejected at the top of value. Maybe we come all the way down in here. Don't know yet. Again, too early to tell. All right. And a couple other things that I was watching for the day, which I will bring up here in just one quick sec. And so I wanted to go over interest rates too. So this is where, things are, I would say, this is a positive for the market, but again, the market may not see this as a positive right away, right? Obviously, we had this big crush in yields today. This was a 2 standard deviation move in what happened in the 4-year bond today. If you want to take a look at the rate and just to kind of give you some visualization, remember that the 2-year bond was above 5%. Just about a week ago, and we're all the way down to 4%. So remember, we heard all this about the inverted yield curve and so on and so forth. So that is changing and changing very quickly, right? And we know as well, I bring this up, I'll try to give a little bit more explanation because I don't think people fully understand this until you spell it out to everybody, right? But this is Fed Fund futures. This is what the this is what the Fed is controlling, right? When they raise interest rates. So right now we're at 4.568 based on what the Fed has done over the last year. And this gives you a sense of what the market is now pricing in, whether or not they're going to raise interest rates or whether or not they're actually going to cut interest rates. So, right, we have all these brokers. It's kind of funny because we have all these brokers that come out and they're like, well, I don't think the Fed is going to do anything now, or the Fed may do 15 basis points, right? All you have to do is look at the Fed Fund futures, right? That is what the market is pricing in. That's much more, to me, it's much more better to see what the market is pricing in rather than make some prediction. Now, again, I'm going to beat up on Goldman, and I'm sorry, they can come back at me and tell me I'm wrong. But whenever like Goldman says, oh, now we're only pricing in 25 basis points, or now we're not pricing in any hikes, I think they're just looking at this, right? So every time that they change their view and saying, hey, now we think the Fed is doing this, I really believe that they're just looking at what Fed Fund futures are pricing in and telling you what they believe, which is fine, but they should really just say, hey, Fed Fund futures are implying this, so we think the Fed is going to do that. But they don't do that. They try to make it like a grand prediction, which is fine. I guess there's some selling that goes on. Maybe they think that there's some complicated model that spits out this conclusion for them, but it's really just what Fed Fund futures are implying. And again, they could correct me if I'm wrong, but it seems like that's what they're doing. So right now, yes. So what I like to do is like bring up this just to kind of show the drastic change that we've seen. And this is in the last 30 days. Where is this 1 month? There we go. So yes, we have gone from a week ago where the market was implying 50 basis points, a half a percentage point rate hike, to all of a sudden there's a possibility that there will be no rate hike on 3/22, right? So here's close to 50 basis points, right? Overnight we were at 25 and now we're at that. So that's for March. And again, you could see, in the right here is the percentage, right? So 40 basis points, 0.40 of a percentage point, and now we're all the way down to less than 25, right? So those expectations are coming in that the Fed may actually do nothing for 3/22. Well, what about the subsequent months? What I like to do is I go out to July, because July was showing the peak rate, right? And that peak rate, I'll do the same exercise here, and I'll show you 1 month, right? But this is where we were just a week ago. The market was pricing in that we were going to get to a high for this year of 5.6%. Now look at it. Now we're all the way down to 4.1. So all of that headwinds, right, and liquidity, right, where the Fed is tightening, well, that is coming out quickly. So this could be a very good thing, right? But it doesn't mean it's going to be a good thing today, tomorrow, this week. It may take some time, but ultimately, right now, what we're seeing with Fed fund futures is that the Fed is not raising interest rates anymore. In fact, they may be cutting interest rates, right? So for a while, that was the big thought that this was going to happen. I mean, with everything that's going on and the stress in the financial system, I think it's a pretty good shot that the Fed is done. In fact, they may be actually cutting interest rates by the time that we get to June, July, and so forth. Now, what makes things complicated is tomorrow we have the CPI report, right? And remember what I said about the jobs report on when I did my video on Thursday, and we had the jobs report on Friday. I said, I don't think this jobs report is going to matter as much as it did prior to what's going on in the financial situation that we have going on. And I think the same thing for tomorrow's CPI report. Yes, it'll be important. What they're expecting is 0.4 month over month, but this is being overshadowed by what's going on in banking. Remember, when this type of stuff happens, you kind of have to think logically through some of these things. When people are worried about their money, right, they don't do normal things, right? So if they were going to buy a couch, if they were going to buy a car, people put those purchases off, right, until they have an understanding of what's going on. So this type of stuff that's going on with all these regional banks is killing demand. And when you kill demand, which is what the Fed wanted to do, but not in this particular manner, inflation comes down. So this becomes secondary. And yes, we still have to worry about this and go through and see if the numbers are going to come down. I don't know if they're going to come down tomorrow or a month from now, but they're killing demand when you've got a financial situation of this magnitude that's coming to us right now. So I wouldn't be as concerned, but that's just me with this number tomorrow, because it's more the bigger importance is that we have stability in the marketplace. Now, on the flip side, if this number does come in light, maybe this will get some buyers into this market. Again, this market is not being supported by the institutions. And how do we know that? Is because when we look at the market breadth every day, it's declining. There's more names that are going down versus going up. The institutions are not buying the dip so far. So I don't know, maybe at some point this week, we might see that. We're also getting pretty oversold. I don't have the new numbers for the McClellan Oscillator, but it is getting pretty extreme to the downside. It's getting close to where we were in October. So what happened in October, right? So again, here's the, if you want to see, because I don't have this up on, I didn't take a screen chart because I don't think that number comes out till about 6 o'clock, but here was the McClellan Oscillator from this week, and it was at a negative 99. Here's where we were in October. So I think we're getting there. Here's the NASDAQ McClellan's Oscillator, which was at a negative 81. And again, it's not as extreme as it was in October, but why do I mention October? Right? Because that's where we made our low for the year in 2022. All right, guys. So I think for me, again, I'm not giving out any advice or recommendations, but I stay patient. And here's my trade, so that you could see what I did today, right? There's no this is exactly what I did. But PBF, which we've seen some call buying, I did buy the dip in that one today. I took a quick target, and I'm still sitting with that one. So I took that one, and I also added just a starter position in TMDX. I had a couple other positions on, but I took them off at the end of the day. Why? Because again, what I was seeing in the marketplace didn't meet my expectations. So I took AMD off for a small winner, and AXON was a small loser for the day. And that's it, right? And you sit and be patient. I sit and be patient and wait for some better, for signals to develop, as well as all the things that I talked about in this video. Guys, have a great night. I hope you're doing the same. If you have any questions, you could always email me or contact me on Twitter. My email's on Twitter, I believe. But and of course, you could check out Tribeca Trade Group at tribecatradegroup.com. Guys, have a great night. See you tomorrow.